Hello, John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here once again to give you my honest and professional opinion regarding the 2022 Canadian housing market. And today I have Anya that works with me joining us today to chime in whenever she feels fit.
Hi, everyone.
Okay, so today I'm going to talk about a few things. There's a lot going on in the media, and the Crea stats came out. I know there's a lot of people that ask for stats on certain areas, which I can't get to right now this week because there's way too much other things going on, but we will get to those in a later video. Again, I have to kind of get through the rest of this stuff. So one of the things I wanted to talk about was people say, it always comes back to, next year the market will go back up and whatnot. And I kind of just wanted to give some history on a couple of other markets and recent downturns and how long they took. So I asked Anya before when we were in a house, and she's like, no, I want to research it. So anyway, I asked her one question, and I have another area. So in the United States, for the Great Financial Recession, I think it was called, for the '08 financial crisis, that we reached the peak in 2006 in the States for the house prices. How long did it take, or what year did it take to come back to that level? And I've already asked Anya this.
2014.
Yeah, I think originally you said 6 years or something, and it's debatable, but
I was thinking about, yeah, it took around 6 years, but I'm not sure.
yeah, and she's
At
pretty
the
good
time
because
I was living there, but I didn't get to the statistics, so I don't know.
yeah, and I'm pretty tough on Anya, so I always put her on the spot in houses and stuff when she's like totally unprepared. Like I wouldn't even answer the questions, but she always tries. So I did some research. I have it here, and the U.S. home prices surpassed their 2006 peak, according to a recent report, and this was in 2016. So it took 10 years for the house prices in the
Okay.
U.S. to come back to their 2006 peak. Now, another one around that same time was the Irish housing market, and of course, I'm Irish, so I paid close attention to this, and I've looked into it, and it was called the Celtic Tiger. Some people call it the Celtic Tiger, but Irish people call it the Celtic Tiger. That one was 2007. They reached their peak, and guess how long it took, Anya? She's just taking a wild guess here for it to come back to
Okay,
those
for
levels.
for Europe, I don't know, let's say maybe 5 to 6 years.
So here's an article, and you don't have this article with you. Your files start after this, but here's an
Okay.
article. Irish house prices hit Celtic Tiger peak, and the CSO said the national index has now reached a value of 163.3 points. That's how they calculate. They do it on a point system, which is equal to the highest level it experienced at the peak of the property boom in April 2007. This article's from August of this year, but that peak was reached again in June of 2022. So it took 15 years for those house prices to come back to those levels. So I get back to that thing where people say, and I hear it all the time, oh, the house prices always go up. And then I'll say, well, not always. And they say, yeah, well, they always go back to where they once were. And it's somewhat true, right? They do. But I think a lot of people realize or think it's 2-3 years from now, or like in a year or two, where it's not. Like these are the two most recent, housing corrections. And it took 10 to 15 years for the house prices to rebound back to those peak levels. So our peak levels were obviously February this year. And again, just to put a bit of perspective in it, right? Now the US house prices, they dropped 33% from their peak, from their '06 peak. The Irish house prices was about 56% from what I've read. And so again, just to show you like the extent or the magnitude of these declines, right? 33% and 56% from the peak. We're at 22% nationally right now. And I still think we have more to go. But anyway, just some interesting stats, right? So just a few articles that I read in the last week. There was so much news and financial markets and everything else like that, but I picked a few. So CMHC sees a steeper home price decline next year than first thought. Here's why. The Crown Corporation said in an updated housing outlook released Thursday that it believes the national average home price in Canada will fall 14.3% by the second quarter of 2023. So this is a theme we're seeing, an updated forecast. I think Desjardins had one I touched on maybe a month or so ago. So of course they're updating their housing forecasts or their downturn predictions further than they were. I think they had 5% before, and this is based on the HPI, the home price index, because of course we've already fell more than 14.3%. I think they're talking about a year-over-year decline from the HPI or something. But anyway, they've redone it because they knew they were off a bit on it. Back in July, CMHC had said that a high interest rate scenario would see average home prices decline 5% over the same period. So originally it was 5%, now it's 14.3%. So almost 3 times further than they originally thought, eh? That's like pretty crazy, eh?
Yeah, it is crazy.
And another article, this was from CTC News, and a lot of people have released this actually too from RBC. Recession expected in Canada in early 2023, RBC Economists. Cracks are forming in the Canada's economy, according to an October 12th forecast by RBC economists Nathan Jansen and Claire Fan. Housing markets have cooled sharply. Central banks are in the midst of one of the most aggressive rate hiking cycles in history. And while labor markets remain strong, employment is down by 92,000 over the last 4 months. And again, this is part of one of the things I touched on, right? Unemployment or employment levels changing or decreasing, or unemployment rising. And we haven't really seen much yet, but it is starting to trend, right? RBC also expects the weakening economy to push the unemployment rate to 7% by the end of 2023, up from a low of 4.9% in June and July. That's higher than what RBC previously forecasted, but less severe than during earlier economic downturns. So again, they previously thought one thing, and now they're redoing their estimates or their forecasts, and that's going from up to 7%. So again, we have to keep an eye on the unemployment rate rising, because it is part of it's going to affect the housing market, obviously. What do you
Yeah, for
think?
sure. And it might be in a few months they will give us a new number,
Yeah,
which would be much
it
higher than we see right now.
it seems like they they don't want to alarm us, so they tell us, oh, it's just going to go a little bit, and then once the reality hits, then they say, oh, it's going to go more, right? So
Yeah.
they're not like doom and gloom like me, right? So but I don't work for anybody, so I can say whatever I want, and I speak the truth, hopefully, right? Do you agree, Anya? Do you
Yeah,
think?
it's good to hear your opinion, John, because you have experience, and your experience and like practice, and you saw it already in 2018, right? The cycle.
Oh yeah,
And it's
I
so
saw that
you
then,
probably
and yeah, we see it, we see it unfolding. But the 2018, they played with the interest rates and put them back down. So
right. So
I think that if they were to put the interest rates back down now, of course, yes, that would change everything. But I don't think they can at this point. So that's the issue, or that's the problem they're faced with. Okay, so we're going to get into the latest Crea stats for the month of September. Canadian home sales soften again from August to September. And the highlights are national home sales were down 3.9% on a month-over-month basis in September. Actually, not seasonally adjusted monthly activity came in 32.2% below September 2021. The number of newly listed properties edged down 0.8% month over month. The MLS Home Price Index, HPI, declined by 1.4% month over month, but was still up 3.3% year over year. The actual, not seasonally adjusted national average sale price posted a 6.6% year over year decline in September. I was actually pretty amazed that the number of sales kept declining, because again, I think they can only go so low, the actual number of sales, not the prices, right? But again,
right.
like we see, and correct me if I'm wrong, Anya, that we still see, like, people are still buying and selling homes, and there's still
Oh
lots
yeah,
of activity. So
a lot of activities, and people still and selling and buying. It just a little bit, we can see a difference from
Hmm.
what it was last year, but people still active.
Yeah, and I find it's those people that the end users now, they want to get into their new home, or they need a bigger home, and they can actually do it now, and they can take a breather and take some time, right, to look for a new house, and without being rushed,
Right.
without going in with no conditions and doing crazy things that they shouldn't be doing. September was another month of lower sales activity, although with many sellers also opting to play the waiting game. The market remains on the tighter side of balanced market territory, said Jill O'Dill, chair of Crea. It makes for an interesting dynamic, one that doesn't really have many historical precedents. The market has changed so much in the last year, and the adjustment to higher borrowing costs is still underway.
So, John, what do you think about this one?
This is interesting here, this part, and
Mm-hmm.
I'm gonna ask your opinion on this after. The important thing to remember is we're still in the middle of a period of rapid adjustment, with buyers and sellers trying to feel each other out, while a lot of people had to take their home search plans back to the drawing board. As such, resale markets may remain on the quiet side for some time yet, with the flip side of that coin being even more pressure on rental markets. So, of course, the flip side, or the other argument is, well, these sellers can just take their properties off and rent them out, and they're getting good rents because the rent market is very competitive. And of course, you can probably comment on that, working with people too, right? What do you
Yeah,
see out there
working
in the
with people.
rental market?
Yeah, I'm working with people who are looking for the properties for rent right now. And what we see here in Niagara region, that to rent one bedroom basement apartment, the prices starts from 1,500 per month. And for let's say 3-bedroom basement apartment, prices goes from 1,900 to rent the whole house. Or let's go for the main level. If you're renting only 3-bedroom main level in a single family home, you can see the prices 2,200 to 2,500. For the whole house, it goes from 25, 2,600 to like 4,000. Yeah.
Yeah,
So
it's like it's out of control, but again, these sellers are trying to take their houses off the market and push up the rents because they need to cover the
yes,
costs. And now I just did some searching for rentals today because I needed some comparables, and there's a lot of places out there in, say, in our area for $3,000 a month, and that seems to
right.
be like a limit, right? And they're having trouble renting them out at that price. But anything under, I don't know, probably 28 or 2,500, it's still pretty active. So yeah,
Yeah, it's
and
not
I
many of them.
and I think that the sellers think they can get by on the rental income for now, but once the market changes, and again, this is my opinion, once the market changes, say in 2 years from now, and the buyers are buying because the prices are low enough, they can get back in, and interest rates come down, and it's a good market for buying. Well, what are all these tenants are going to come out of these rental properties and go and purchase homes, and I think at that point is when the sellers or that held off are going to be in trouble. That's why I always advise people, don't look to the future, like in 2 years, 3 years the market's going to be back up to February values. It could take 10, 15 years. But again, a lot of them want to wait it out, and this is where we have these dynamics that they're talking about with Crea, right? It's something they've never
Right.
seen before. This is unprecedented, as Jill O'Dill said. So, of course, with inventory is continuing to rise, even though some sellers are holding off. There were 3.7 months of inventory on a national basis at the end of September 2022, up slightly from 3.5% at the end of August. So inventory is always continuing to rise nationally, and we see it locally too now. Breaking it down regionally, most of the recent monthly declines had been in markets across Ontario and to a lesser extent in BC. The standout trend in August and September was that quite a few of those Ontario markets saw monthly price declines getting stopped in their tracks, mainly in Greater Golden Horseshoe. In a few markets, prices even popped up a bit between August and September. So yeah, it was. I said that too. Like I did see there was it was a strong market compared to what we've seen in the last couple months. Um, of course, there's a lot of people, pent up demand and stuff that people were waiting. And yeah, we're seeing them. But again, you still, if you don't have your house priced right, it's going to sit. Looking across the prairies, prices in Edmonton and Winnipeg are down a bit from their peaks, while prices are sliding sideways in Calgary, Regina, and Saskatoon. Similarly, in Quebec, prices have dipped in Montreal, but are mostly flat in Quebec City. On the East Coast, price softness that had been confined to Halifax, Dartmouth area appears to now be showing up in parts of New Brunswick and Newfoundland and Labrador, while prices in Prince Edward Island have flattened out in recent months, but have not yet moved any lower. So that's kind of interesting, the recap of the markets. So here is the little graph of the composite HPI. Expect MLS HPI year-over-year comparisons to shift slightly into negative territory in the final months of the year, with declines becoming larger next spring, a year out from the peak. So you can see this is for the HPI, and we're almost going into the negative, right? And you can see the negative there was 2018. After 2008, we went negative. So we're going to go negative now in the next month or so. And we will be severely negative on the HPI year over year by early next year. So it's going to be very interesting to watch this, even though I'm not a big HPI fan.
To follow, yeah.
And here is the 10-year monthly moving average. Yeah, we're well below the number of monthly sales. This is the number of sales, well below the 10-year average now. And it looks like it's going to keep going further. But again, I don't see much more downsides to the number of sales, because people still have to, buy and sell homes for normal reasons, I call it. Here is the average price, which this is the graph I make myself. We actually went up a bit in September. So our average price in Canada now is $640,000. It was $637,000 the previous month in August. So we're up 0.8% month over month. Not a huge climb, but we're up. 21.6% from the February peak, we're down. I think it was 21.9% if you were looking at August, but yeah, still down, obviously. And we're down 6.7% year over year for September. So I just wanted to add this trend line into that same graph. And you can see here, someone pointed it out on our provincial one. This was not the one they pointed it out on, but it is the good eye there. There's two of you actually in the comments. We're seeing a head and shoulders form. And so you see, I don't know if Anya, you probably won't be familiar with the head and shoulders pattern. Maybe you are, and you'll amaze me, but I doubt it, because it's like a stock trading indicator.
Oh.
So what happens with the head and shoulders is you get a head in the middle and the two shoulders, one on each side. So it looks like we're getting the right shoulder now. And of course, after a head and shoulders happens, there's declines after, right? It's a stock indicator. So we get a big decline. So we have a head and shoulders pattern clearly forming both on the national and on the provincial for Ontario average prices. So this is just a sales activity. They're down, and the only month lower would be the start of the pandemic in Q2 there, March, April, May. So Q2 of 2020 is the lowest number of sales, but we're the next lowest month in the last 5 years is, or the next lowest quarter, I should say, was Q3 of this year.
Yeah, it's pretty visible. You can see it even. Yeah, I didn't need to look deeply.
Yeah. And here's the new number of new listings, I should say, for Canada. And we're, it looks like we're average. We're not really at the high end or the low end. We're kind of in an average spot for Q3. So again, people still talking about lack of inventory, but our inventory is gaining, and it's nothing abnormally low looking at this comparing, to the last 5 years.
Yeah, and we see properties sitting on the market for a longer period of time than it was in the past.
And this is the graph from Crea talking about the months of inventory. And you can see we're climbing. It was 3.7, as they stated. We're 3.5 the month before. We're up to 3.7. 5, they say, is the long-term average. But it looks like we're heading that way now. And yeah, we'll keep an eye on it. And the sales to new listing ratio, We started to bounce back in August, but of course it went right back down to a low. So it's on the weaker side of a balanced market. So it is more of a buyer's market now in Canada, not by much, but you can see it started to rebound the red line, and then it went right back down. And lastly, we have the residential price that they put out, and you can see that little uptick there was that 0.08% on the red line for September. Again, it was a good month, September. Usually spring and fall are the best months in real estate. And of course, that's what helped, the average price. And the HPI is heading directly down, almost directly down the blue line. So that's it for this week. And thanks again for watching. Thanks for Anya for coming on. If you liked having Anya on, let me know in the comments. If you didn't, you can let me know, and I won't share that with her. But anyway, until next week, I'll see you then.
Okay, thank you, John, for sharing your honest opinion with us. I really enjoy joining you on this video, and I hope to see you next week.
All right. See you later.
Okay, bye, everyone.